Good afternoon, everyone, and a very warm welcome to today's webinar on understanding annual return filings under the EPR for used oil. Thank you for joining us today, especially during a crucial compliance phase when annual return filing timelines and all the portal updates are top of mind for many of you. In the meantime, that people are joining in, I will give you a little brief about ReCirculytics. So, ReCirculytics is a focused EPR consultancy and a technology-led compliance practice supporting organizations across all notified waste streams, including your plastic packaging, battery, e-waste, tire, and of course, used oil. So, ReCirculytics was founded in August 2025, and it builds on years of domain expertise to deliver a focused EPR consulting and technology practice. And we provide end-to-end compliance support across all the notified streams, and we help organizations remain compliant, competitive, and future ready. Our mission is to bridge policy, practice, and technology through data-driven solutions that strengthen governance, circularity, performance, and long-term sustainability outcomes. Now, Sujain Jain, who is founder of ReCirculytics, is a first attempt chartered accountant and an early pioneer in India's EPR compliance ecosystem. Having supervised 400 plus annual return filings himself, he brings a very deep expertise in regulatory reporting, credit management, and digital compliance workflows. Prior to ReCirculytics, he worked with Fortune 500 compliance companies and global packaging leaders, designing a practical compliance and circularity strategies, and continues to contribute as an EPR expert and industry speaker. Now, ReCirculytics provides services across compliance, consultancy, credits, and technology. Now, we have some advanced software tools that we use to make the EPR compliances of our clients much more efficient, accurate, and easy. Because even digit that is wrong in your reporting, it might lead to a lot of liabilities or extrapolated targets. So we make sure that we are using these softwares for our clients' EPR compliances to make it much more accurate and easy. So we have tools like GST invoice to Excel converter, GST invoice, JSON to PDF converter, smart verification of registration status in case of plastic, and Tally EPR TDL integration, automated CPCB bulk uploads, and EPR credit intelligence. Let me briefly walk you through what we will be covering today, so you know exactly what to expect from this session. Now, today's webinar is designed to be practical, portal-oriented, and experience-driven, not just theoretical or regulatory-based. So, we will be covering a step-by-step understanding of annual return filing under EPR for used oil, an overview of the target adjustment module for the producers, and some critical do's and don'ts that can help you avoid errors, rejections, or future regulatory challenges. Okay. So before we move deeper into used oil specific compliances, it is important to understand some key developments in the EPR ecosystem over the past few weeks. So the biggest update of today is that the common EPR portal has gone live, and it is enabling integrated access across waste streams through a single sign-on. The update you can see on the screen, wherein you can see that ticker going on about the SSO. And now this portal, so if any entity has multiple portals, like if you are registered under plastic packaging, e-waste, battery waste, used oil, tire waste, if you have multiple EPR portals with you, you usually have to connect with a lot of different people in your organization, because for OTPs, you need different peoples and different login numbers. So now with this particular system, you can just integrate all of your EPR portals, and just one credential will help you access all the portals. So this is a big news that has been gone live today itself. And other than that, we have some developments that have happened in the past few weeks in the EPR ecosystem, like the lost credential utility is now available on the EPR waste tire portal. So this addresses one of the most common access challenge faced by all the stakeholders, because a lot of people, they face challenges when they like lose out on your credentials, maybe because somebody has exited from the organization, or maybe they forgot the credential. So this is how they can easily access their credentials on the EPR Waste portal. CPCB has also started daily video conference support session to resolve sign up and registration issues on the EPR ELV portal. As you all know, ELV EPR portal has gone live from 15 January. So like in all of your portals like plastic, e-waste, battery, you have a video conference that goes on by CPCB. Same video conference is now operational on the EPR ELV portal as well. So any of the entities, if they are facing any challenges or have any doubts or questions about it, they can join in the meeting and get their questions resolved there. And the electronic trading and settlement platform, which is ETP, is now accessible for public viewing, although trading functionality is not yet enabled. And if you want to know more about the EPR ETP, we have hosted a webinar in December. So you can just go through that webinar on our YouTube channel. And if you want to understand it in more depth, you can connect with our team one-on-one. Now, with this context in place, we now move to the core technical part of today's session, covering producer definitions, EPR targets, annual return filing, workflows, adjustments, and portal walkthroughs. Now, it gives me great pleasure to hand over the session to our speaker, Mr. Sujain Jain, who is also the founder of ReCirculytics. And like we discussed, Sujain brings deep hands-on expertise, having supervised 400 plus annual return filings and worked extensively with the producers, recyclers, regulators, and other obligated entities across the EPR ecosystem. So over to you, Sujain.
Thank you, Arushi. Good afternoon to all. Thank you for joining today's webinar. So before diving deep into understanding how the annual returns are to be filed or what are the nuances which are required to be taken care of before the submission of annual return, first let's understand the definition of producer. As per the rules, the producer is defined as any person, entity, irrespective of the selling technique, who is manufacturing or offering to sell base oil or lubrication oil domestically under its own brand name, or is selling lubrication oil domestically under its own brand name using base oil manufactured or manufactured by other manufacturers. Third is the person who offers to sell imported base oil or lubrication oil. So this was the definition which was provided in the EPR framework of the rules. Post that, there was a SOP for registration which was introduced by the Central Pollution Control Board, which further classified the activity of the producer under 9 producer types. You can see it on the screen. It basically involves anyone who is involved in the whole chain of manufacturing or trading of whether it is whether it is base oil, lubrication oil, or for that matter, even RRBO. So if you are a manufacturer, a importer, and a seller of all of these 3 kinds of oil, you will be covered under the definition of producer. Next slide, please. Now that we have understood who is a producer under the rules, let's understand how the EPR targets are allocated to the producers. On the used oil EPR portal, there are 17 categories of oil which are already present on the portal, wherein the producers are required to provide the data. Further, if the stakeholders feel that any of the category, which is any of their oil which they are trading in, is not mentioned in the list, the same can be added with an additional line item. For producers, at the time of registration, the producers are allocated a tentative EPR target. This tentative EPR target is calculated considering the total quantity of lubrication oil or base oil sold domestically into 1 minus the percentage of operational loss after usage. That essentially means whatever leftover portion of the oil post consumption by the consumer is left is to be considered into the EPR target percentage. Kindly note that the CPCB has not provided any guidance manual for the calculation of this operational loss percentage after usage, but the submitted details by the producers shall remain subject to regulatory verification. Once the producers are allocated tentative target, the producers are also expected to give the breakup of the quantity which they have sold. So the producers are expected to provide the breakup in three further categories. If they are dealing or selling to other producers who are making products and selling it under their own brand name, or who are directly selling their products which are purchased from the producers in their own brand name, or who are co-branding. So for the first case, the example would be a person who is buying the oil, or let's say is buying the virgin base oil from you, and he is making GPLO. In that case, he will be and is selling the GPLO in his own brand name. In that case, he will fall in the first category. If the producer is directly taking the product or asking the other producer itself to brand the product and sell it in his own brand name, in that case, they will be captured in the second scenario. Third scenario is in the case wherein there is co-branding of two producers. So the producers are required to give the data in these three brackets also. Currently, when at the time of registration, the producers will be allocated a tentative EPR target, which will not factor in the B2B transactions which have been done by the producer during the year. It is at the time of annual return that the producers will be provided an option to adjust such targets based on certain requirements. Now, the EPR targets are allocated to the producers from financial year 24-25 onwards. The targets start with 5% in 24-25 and keep on increasing and reach up to 50% by 2030-31. This shows that the government is, or the Central Pollution Control Board is expecting that through this EPR regime, the collection of used oil, which is currently very low in India, will increase. The base number for application of this target percentage would be the sales made by the producer 2 years back. So, for example, for the sales made by the producer in 22-23, the target will be allocated to the producer in 24-25. So, at the time of submission of data, the producer needs to be very careful of the data which is being submitted, as the financial impact of the same will be reflected in the expenditure which is to be done after 2 years. Next slide, please. Now that we have understood how the targets are calculated theoretically, we are taking a small example wherein we are assuming that a company has sold 100 metric ton of engine oil during the FY 22-23 and has reported or assumed the operational loss of 25% after usage. This producer directly sells in the market and not to any other producer. Another assumption which we have taken is that the quantity of sale remain consistent for the next 7 years. So if you can see in the table which is provided that the target for 24-25 will be dependent on the sales made in 22-23, that is 100 metric ton, upon which the operational loss of 25% is applied. That is 100 into 1 minus 25%, which will give you 75 tons of used oil which is being generated after usage, upon which a target percentage of 5% is applied, and the final EPR target for 24-25 will come up to 37.5%. Accordingly, as we keep moving on year, the targets keep on increasing from 3.75% all the way to 37.5% from 2030-31. For used oil importers, the target calculation is different. The used oil importer must fulfill the 100% of the EPR targets of the volume they have imported in the previous year. The import of used oil is only allowed for re-refining basis and not for energy recovery. Also, due to this condition, all the used oil recyclers will also have to register as used oil importers on the portal. Next slide, please. Okay, so now that we have understood what is a producer, how their targets are computed, now let's understand how the annual returns are to be filed. So we have tried to break the annual return filing procedure in 5 simple steps. First is the adjustment of EPR target allocated. Second is the submission of procurement and sales data for the 24-25 financial year. Third is the fulfillment of EPR obligation, that is essentially per procurement of EPR certificates and submitting it against the target allocated. Fourth is the submission of awareness programs. And fifth is the payment of annual processing fees and the final submission. Next slide, please. Okay. Now let's start with the EPR adjustment. So in August 2025, the Central Pollution Control Board had released a guidance document specifying how the adjustment will happen for the producers. This document was initially uploaded on the EPR portal, but then it was covered or provided at the backend, wherein when the user logins, they will be able to see this guidance manual and not available to public. In this guidance manual, there were two types of adjustments which were proposed. First is the operational loss adjustment, and second is the adjustment due to B2B operations. So, if an operational loss which was reported was not in line with the general industry practice, CPCB has the right to adjust it based on the benchmark value laid down by CPCB. As of today, we have not seen any benchmark value which the CPCB has released, but we are seeing some of the producers who have got their target reduced. Secondly, a lot of producers are interpreting the clause which is there in the EPR rules that says that the CPCB only has the power to reduce the EPR targets and not to increase it. But I feel that is something which is taken in the wrong spirit. So if you see the formula which is available in the EPR target, that says 5% of total base oil or lubrication oil which is sold. And as a footnote, they have given that the CPCB has the power to the reduce it to a percentage of which the actual operational loss is sold. So that means essentially that the target will not be allocated on 100% of the oil which is sold, but it will be allocated or it would be adjusted for the operational loss which is actually there. So as per our understanding, the CPCB can either reduce or increase the loss reported by the producers. Second adjustment, but in the whole guidance document, there is no further mention of, on what basis this operational loss will happen on the portal or what would be the modality or the benchmarks laid down by the Central Pollution Control Board. The second adjustment is in case the lubricating oil or the base oil are being transferred from two registered producers, then in that case, the obligation of the person who is sending the request will be excluded once the or the transferee producer accepts it on the portal. Kindly note, the adjustments will be based on the data reported on the portal 2 years ago. That is the sales data reported by the selling producer and also the purchase data which is reported by the buying producer. And this is not just a one-time activity. The producers are required to perform these adjustments for each of the financial years. So let's understand how can we initiate the request. First thing is you have to go to the EPR adjustment tab, which is available on the left-hand side. There you have to select the financial year for which you are required or you want to adjust the EPR targets. Once you have selected the financial year, the quantities will be automatically reflected on the portal. The sales quantity which you have reported will automatically reflect on the portal. Then the producer is expected to click on send request, which will enable the procedure for initiating the request for adjustment of the target. Next slide, please. Once you have clicked on send request, there will be a window which is visible on the left hand side, wherein the sending producer will be required to enter the registration ID of the receiving producer. This registration ID is not available publicly, but we will have to obtain it from the receiving producer. This registration ID is available with the receiving producer in their EPR certificate issued to them. So you can see on the right hand side, the registration ID or the registration number is mentioned twice on the registration certificate of the receiving producer. Once you enter this registration ID, the system will fetch the name and the GST number of the receiving producer, and then you have to confirm and send the request to the receiving producer. Uh, Kindly note the sending of this request is also dependent on various factors. As discussed earlier, the data which is reported at the time of registration for FY 22-23 and 22-24 is the base for initiating this adjustment. And for the future years, it would be the data of 24-25, which would be the base. In this, two things which are required to be taken care of is the type of oil which you are selecting and the quantity purchased or sold. The second dependency is the acceptance of the receiving producer. So if the receiving producer is unregistered or is not able to log in on the portal due to some or the other reason, in such case also there would be an impact on the registry on the adjustment. A request will be auto rejected in the following scenarios. Firstly, if the sent quantity is greater than the received quantity reported by the producer. So let's say you are sending a request for 100 metric ton and the under let's say GPLO, and the receiver has only reported that the total procurement for 22-23 is only 20 metric ton. In such case, the request would be immediately rejected by the system itself and it will not even reach the producer who is there. Second check if is that so let's say the producer I am sending 100 metric tons of sales request to a producer, and while the producer has reported the total procurement as 500 on its portal, but he has already accepted request of 480 or 420 metric tons. Even in that case, the adjustment request sent by me will be auto rejected by the system and will not even reach the producer. Third thing is if the oil type is different. So this, in my experience, I have observed at a lot of places that the sales reported by the producer entity, the oil category of the sales reported by the producer entity is different, and the oil category reported by the seller entity is different. So in that case, also there the request would be auto rejected. If all of these checks are cleared, then the request would be sent to the receiving producer and now he has to accept it. Once the requesting producer has accepted the target adjustment, the target will be reduced from the sender producer and there would be no impact on the receiving producer's target. That is obviously because the receiving producer's target is dependent on the sales which the receiving producer is doing and not based on the procurement which is being done. Any questions? I understand here. We can take it up in the Q&A sessions. Yeah. So next is what happens in the case of co-branding. So firstly, we need to follow the same steps. That is, we need to select the financial year and we need to click on send request of the particular producer to whom we have to send the request. So once that is done, here, the sender producer has to mention his share of the co-branding item sold. So, for example, if I am sending the request to another producer, in that case, if my share of that co-branding product is 60%, I will mention 60% here and send the request to the receiving producer. A word of caution, a lot of producers at the time of registration had only selected or only provided data for their own share of sales made on the CPCB portal. In that case, since the whole quantity is not reported by both the buyers and the sellers, then there is no requirement of adjustment module in this case. Next slide, please. So now we will understand this whole co-branding adjustments with two scenarios. I will take the B scenario first. I'll first explain the scenario. The actual sales in this co-branding partnership was 200 metric tons, out of which the co-branding ratio between the two partners, that is L and M, was 60-40. In scenario B, both the producers have adjusted their sales accordingly and have only reported their share of the sales. In that case, as we had seen in the earlier slide, no adjustment will be required because the sales has already been adjusted. But if both the entities have reported total sales, like the way done in scenario A, the partner L and the partner M both have reported 200 metric tons. In this case, if partner L is the sending requester, he will enter 60%. If partner M is the sending requester, he will send the percentage as 40%. Based on the request sent and acceptance, the adjusted quantity on which the target which will be allocated to the producers will be 120 and 80. That is post adjustment of the target which is done. So in scenario B, there is no requirement of adjustment to be done. In scenario A, there is a requirement of adjustment to be done. Now there is another scenario in the sense saying that partner M has not at all reported this quantity on his portal. In such cases, the whole liability will have to be taken by partner L, as there will be no room for adjustment in the data reported by partner M. So before reporting any data, you need to take care or coordinate with your partners, whether it is your supplier or it is your customer, so that there is no issues or challenges in doing these adjustments after 2 years. Next slide, please. Once the adjustment request is sent, there would be four type of statuses which can appear on your portal. First is the request sent status. That means the request has been sent by the sender and it is awaiting action by the receiver. Second is the request accepted. That means the receiver has also accepted the request. Okay, there's a typo there. My bad. Then there is a request rejected by the receiver. In that case, the request is rejected by the receiver, and there is a recent request option also available, wherein the sending producer can send the request one more time to the receiving producer. But kindly note, it cannot be done more than once, so more than twice, and any wrongful sending or acceptance of the EPR target request shall be deemed as a violation of the applicable rules. So, in terms of action points, what we suggest our clients here at ReCirculytics is that first you need to communicate with your clients offline that this is the type of oil and this is the number or this is the quantity which we are reporting on the portal, and request them to report the same quantity as in their procurement, and also obtain the registration number uh, to send the request after 2 years. Second is sending the request on the portal, and third is tracking the status of that request. So yes, this completes the whole adjustment module. Now let's understand the procurement data submission. So the producers are required to submit the data of their production, domestic procurement, and imported procurement of base oil and lubrication oil. Uh, so if you see on the portal, there could be a scenario wherein the total of all of these columns would be more than the total sales. But that is logical because you are also reporting the procurement of base oil, which might be used, to produce various types of oil. So ideally, the way we at ReCirculytics can reconcile the data for our clients is we take in the procurement of base oil and all the other oils, and we subtract the sales of base oil which is directly made, and we add up the production data to that. That gives us the total actual production or procurement excluding the direct sales which have been made or the consumption which has been made. Again, the domestic whatever entries with the producer is entering into the procurement for the domestically procured quantity should be carefully verified, as that particular field will serve as the basis for adjustments of the request that the suppliers will send after 2 years. So if I do not submit any data in the procured domestically number, in that case, what will happen is my supplier will not be able to send me the request after 2 years. So a caution is to be taken while reporting or submitting before submitting of the data. Also, just like at the time of registration, a CA certificate certifying the procurement and sales quantity is also required to be uploaded on the portal. In the same way, the way we had submitted the sales data at the time of registration, the producers are again requested to provide the sales data for the current financial year for which the annual returns are being filed. The data submitted here, along with the data which is to be submitted in the Excel template, will form the basis for future adjustments of EPR target. In terms of co-branding module, as we discussed, the complexity regarding the adjustments required for the co-branding module, it is advised that the producer coordinates with the co-branding partner and confirms on the agreed methodology for reporting the sales in order to prevent discrepancies at the later stage. Okay. Now, there is also a tab wherein the producers are required to submit the details of the awareness programs undertaken by them. As per clause 31, that is, the responsibilities of the producers of used oil. The producers are required to provide consumers with the contact details, addresses, email IDs, and toll-free numbers on their website, advertisements, or documents, and are also requested to create awareness through media publications, advertisement posters, or communication channels. Based on the above activities done by the producers during the year, the producers are requested or directed to provide details of this data. So this data includes, what type of seminar you had held, some proof regarding what the seminars were, maybe the pictures of the seminar, and publication if there what medium was the publication for. And the producers are allowed to, add more than one scenario. So if they have conducted a couple of seminars or awareness sessions, or they have done publications in different ways, they can do that. Now, the last step for filing of annual returns is submission and payment. So, one thing to note that it's a warning which is there on the CPCB portal as well, that once the annual return is submitted, it cannot be edited. And the fees which is to be paid on the portal is basically 25% of the fees paid at the time of registration. So if your sales is more than 1 lakh metric ton, in that case, the fees of annual processing charge which you have to pay is 2.5 lakh rupees. If it is less than 1 lakh metric ton, but up to 50,000 metric ton, then it is 1 lakh 25,000 and so on. So I guess, yes, that, okay. Yeah. So one more update which was there on the used oil portal very recently is that the CPCB has introduced a tab on the national dashboard wherein in the recycler section there is a column which shows total certificate. While this column I guess has not been updated since it is there on the portal, but the message which they are trying to give is that a lot of recyclers have started generating the credits or their physical verification which has been pending from a lot of time, has now been completed, and maybe in the future we will be able to see the data or the details of the certificates available with the recyclers so that we can coordinate with the recyclers to purchase the certificates.
Okay, that was quite a heavy session and very technical. So, thank you so much, Sujan, for that extremely insightful and detailed walkthrough. So, now this session clearly highlighted not just what needs to be done, but how and why each step in the annual return filing process matters from a regulatory perspective. And some of the major takeaways from this session would be for me will be first of all, the correct producer classification is very much foundational and directly impacts the targets and adjustments, and the data consistency in procurement and sales reporting is very critical, as today's data can drive your future liabilities. Now, the target adjustment module also requires careful coordination between producers, and offline confirmation is as important as portal actions. Once submitted, the annual returns cannot be edited, and making pre-validation and review will be very much essential. And the awareness programs and documentations are increasingly becoming an area of regulatory focus. So I'm very much sure that this session has helped you understand the critical do's and don'ts of filing your annual returns on the EPR Used Oil portal before the deadline. So now I would like to thank you. Thank you to all the participants for your active participation and the thoughtful questions that you have put in. And a special thank you once again to Mr. Sujan Jain for sharing such valuable insights and practical guidance. Now, as EPR regulations and portals continue to evolve, staying updated is much more important than ever. Which is why we will like to invite you to join our ReCirculytics WhatsApp community. You can follow us on LinkedIn, wherein you will also get all the updates, and you can always reach out to us on the mentioned email and the phone number. So thank you once again for joining us today, and we look forward to engaging with you again very soon with another important and insightful session. So have a great day ahead. Thank you so much. We will be closing the webinar now. Thank you.
Thank you, everyone.